Hello everybody, this is Patrick MontesDeOca with the weekly Sikin Alpha report published on March 12, 2018. Gold and silver ratio signals massive silver rally. Summary. It appears that all the short-term targets in the gold market have been met. The gold-silver ratio has given an unusual signal that the price of silver could be setting the stage for an explosive move to the upside. Silver is offering an incredible historic opportunity. The target price for silver over the next 3 years is over $65 an ounce. Gold market meets September 28, 2017 short-term targets. Upon completion of the 180-day cycle that began on September 28, 2017, which we published in Sikin Alpha regarding the gold market long-term outlook, it appears that all the short-term targets in the gold market have been met. We have corrected back down to test support levels in the 1309 to 1317 area before the resumption of the uptrend occurs to complete the long-term targets of 1386 to 1484. We highly recommend adding to your long positions if gold tests these levels again. Gold and silver ratio signaling a silver rally. The gold-silver ratio has given an unusual signal that the price of silver could be setting the stage for an explosive move to the upside. The silver market is really an interesting product to trade. It has multiple personalities, since it can be used for industrial, scientific, and technological purposes, as well as having a long history of serving as a currency or monetary unit. It has long been called the poor man's gold. November 2008 all over again, 400% silver increase. The current gold and silver ratio is at 80-81 roughly, which is at or near the historic highs, and is very similar to November 2008 when it traded at 80.48. The price of silver then was trading at $9.70 an ounce, just before the Great Recession of 2008. The price of silver then exploded to the upside and went to $49.82 as of April 2011, as the gold and silver ratio collapsed to 31.53. Silver moved from $9.70 to $49.82 an ounce, more than 400% move in less than 3 years. When I look at silver trading at $16.55 currently, I begin to see that the silver is offering an incredible historic opportunity. When we see the fundamentals in the silver market, there is an increase in the use of silver in solar panels, especially in newer panels. As we move into a cryptocurrencies environment, the general consensus has totally forgotten silver, which has the qualities of a currency. Cryptocurrencies are in the early stages of development in establishing themselves as assets. This does not mean that such new assets have eliminated all other assets, which have proven themselves historically to provide not only the ability to produce positive returns, but to serve as risk assets as we enter in any economic or political crisis. Do not forget gold and silver. Economic fundamentals. The policies of the current Trump administration are not positive for the economy. Wage growth, inflation, the decline of the U.S. dollar as the world's reserve currency, and an economy that relies on a hope for renaissance of the U.S. economy, is an economy based on shaky foundations. When you take into account current U.S. economic policies, such as our level of debt and inverted yield curve, which means that short-term interest rates could rise faster than the long-term rates, the current administration policies combined with the current environment could prove devastating for the bond markets, especially when interest rates rise. With the current monetary policy momentum to raise interest rates, it creates an alarm that some areas in the economy could begin to be affected negatively at a fundamental level. The question is when, where and when will we begin to see this unintended consequences of the current policies discounted in the price of silver? The gold and silver ratio indicates that you can buy 80 ounces of silver for the price of 1 ounce of gold, when the average mining gold-silver ratio is about 1 to 9. Based on the track record of the ratio, we have seen the price of silver explode exponentially when the ratio has been at such a position before, adjusting its price to its mean, while taking into account an economic or political crisis that might jeopardize the world economy. The question is, if we are currently running the gold and silver ratio at the same level as in 2008, when silver was trading at $9.70 an ounce, are we looking at a 400% move in silver over the next 3 years? This indicates that as we went into the 2008 Great Recession, the price of gold and silver came into focus as risk assets. And the price of silver went into a record high in 2011 at $49.82. If this occurs, the target price for silver over the next 3 years is over $65 per ounce. Weekly silver supply and demand levels. Let's take a look at the current environment of silver in terms of the supply and demand levels that we use to identify trading opportunities for the coming week. If we look at the current report that was produced by the Variable Changing Price Momentum Indicator, the VCPMI, as of March 9, 2018, it indicates that the silver market closed at 1646. The first VCPMI filter, which is the weekly trend momentum using the 9-day moving average, was 1694. With the market closing below 1694, the VCPMI is telling us that the trend momentum is slightly bearish as we come into this week. It's also telling us that the price, if the price reverts back above 1694, it would negate this short-term bearish trend to neutral. If you want to trade the short side of the market, 1694 would be a reversal pivot point that would neutralize this bearishness coming into this week. The second filter that we use is the weekly price momentum indicator, the mean or the average price coming into this week. The VCPMI identifies the average price and then extrapolates the extremes above and below the mean. When the price closes below the weekly price momentum, as in this case of 1681, we have a bearish price momentum as we come into this week. If it closes below the average price, it activates the level of demand below. In this case, it's telling us that if the market comes down to 1633 to 1604, which are the buy 1 and buy 2 levels, you should cover any short position in reverse and buy long. This activates the levels of demand for the extreme below the mean, with a high probability that if the price reaches the buy 1 and buy 2 levels, we are looking at a 90-95% probability that the reversion will occur next week and bring this market back above 1681. A second close above 1681 would activate the extreme above the mean of 1690 to 1718. The VCPMI is able to give self-directed traders a structure that you can use the reversion to the mean with a high degree of success based on highly probable events. With the gold-silver ratio trading at historic levels above 80, it is my conclusion that when we look at the relationship to the 2008 high, I find a very similar situation that indicates that the price of silver is ready to revert back to its mean. And if we look at the long-term targets, we're looking at $65 target levels for the silver over the next 3 years. Over the short term, coming into this week, if we can close the market above 1690, it would set the stage for the continuation pattern that began on September 28, 2017, the 360-day cycle bottom for the gold and silver markets, which we published in Seeking Alpha. The information in the market commentaries was obtained from sources believed to be reliable, but we do not guarantee its accuracy. Neither the information nor any opinion expressed herein constitutes a solicitation of the purchase or sale of any futures or options contracts. It is for educational purposes only.